Welcome to Crypto Firm channel. Don't forget to turn on notifications for more videos and kindly subscribe to this channel. What is a central bank digital currency, CBDC? Central bank digital currencies, CBDC, are a form of digital currency issued by a country's central bank. They are similar to cryptocurrencies, except that their value is fixed by the central bank and equivalent to the country's fiat currency. Many countries are developing CBDCs, and some have even implemented them. Because so many countries are researching ways to transition to digital currencies, it's important to understand what they are and what they mean for society. Key takeaways. A central bank digital currency, CBDC, is the digital form of a country's fiat currency. A nation's monetary authority, or central bank, issues a CBDC, which promotes financial inclusion and simplifies implementing monetary and fiscal policy. Understanding central bank digital currencies, CBDCs. Fiat money is a government-issued currency that has no backing from a physical commodity like gold or silver. It is considered a form of legal tender that can be used to exchange goods and services. Traditionally, fiat money came as banknotes and coins, but technology has allowed governments and financial institutions to supplement physical fiat money with a credit-based model that records balances and transactions digitally. Physical currency is still widely exchanged and accepted. However, some developed countries have experienced a drop in its use, and that trend accelerated during the pandemic. Governments and central banks worldwide are exploring the possibility of using government-backed digital currencies. When and if they are implemented, these currencies would have the full faith and backing of the government that issues them, just as fiat money does. The introduction and evolution of cryptocurrency and blockchain technology have created further interest in cashless societies and digital currencies. Goals of CBDCs. In the US and many other countries, many individuals don't have access to financial services. In the US alone, 5% of adults didn't have a bank account in 2020. An additional 13% of US adults who had bank accounts instead used costly alternative services like money orders, payday loans, and check cashing services. The main goal of CBDCs is to provide businesses and consumers with privacy, transferability, convenience, accessibility, and financial security. CBDCs would also reduce the risks associated with using digital currencies, or cryptocurrencies, in their current form. Cryptocurrencies are highly volatile, with their value constantly fluctuating. This volatility could cause severe financial stress in many households and affect the overall stability of an economy. CBDCs, backed by a government and controlled by a central bank, would give households, consumers, and businesses a secure means of exchanging digital currency. A CBDC also provides a country's central bank with the means to implement monetary policies to ensure stability, control growth, and influence inflation. Types of CBDC. There are two types of CBDCs, wholesale and retail. Financial institutions are the primary users of wholesale CBDC, whereas consumers and businesses use retail CBDC. Wholesale CBDCs. Wholesale CBDCs are similar to holding reserves in a central bank. The central bank grants an institution an account to deposit funds or use to settle interbank transfers. Central banks can then use monetary policy tools, such as reserve requirements or interest on reserve balances, to influence lending and set interest rates. Retail CBDCs. Retail CBDCs are government-backed digital currencies used by consumers and businesses. Retail CBDCs eliminate intermediary risk, the risk that private digital currency issuers might become bankrupt and lose customers' assets. There are two types of retail CBDCs. They differ in how individual users access and use their currency. 5. Token-based retail CBDCs are accessible with private keys or public keys or both. This method of validation allows users to execute transactions anonymously. Account-based retail CBDCs require digital identification to access an account. It is possible to develop two types of CBDCs, wholesale and retail, and have them function in the same economy. Issues CBDCs address and create. The Federal Reserve has identified critical requirements a CBDC meets, as well as matters that need to be addressed before one can be designed and implemented. Issues addressed by CBDCs. Free from credit and liquidity risk. Lowers cross-border payment costs. Supports the international role of the dollar. Aims for financial inclusion. Expands access to the general. Financial structure changes. Financial system stability. Monetary policy influence. Privacy and protection. Cybersecurity. CBDC versus cryptocurrencies. The cryptocurrency ecosystems provide a glimpse of an alternative currency system in which cumbersome regulations don't dictate the terms of each transaction. They are hard to duplicate or counterfeit and are secured by consensus mechanisms that prevent tampering. Central bank digital currencies are designed to be similar to cryptocurrencies, but they may not require blockchain technology or consensus mechanisms. Their value is dictated by investor sentiments, usage, and user interest. They are volatile assets more suited for speculation, which makes them unlikely candidates for use in a financial system that requires stability. CBDC mirror the value of fiat currency and are designed for stability and safety. Central banks in many countries have pilot programs and research projects to determine the viability and usability of a CBDC in their economy. As of March 2023, there were 11 countries and territories with CBDCs. They are the Bahamas, Antigua, Barbuda, St. Kitts, Nevis, Montserrat, Dominica, St. Lucia, St. Vincent, the Grenadines, Grenada, Nigeria. 18 countries now have a pilot program, including 7 of the G20 economies, and 32 countries have a development program. The US is one of those countries exploring whether a CBDC could improve on an already safe and efficient US domestic payment system. Is CBDC a cryptocurrency? Though the idea for central bank digital currencies stems from cryptocurrencies and blockchain technology, CBDC aren't cryptocurrencies. Is a CBDC based on a blockchain? A CBDC can be based on a blockchain, but it doesn't need to be. Don't forget to subscribe to our channel for more interesting videos and turn on the notification button.